What's up, everybody? Let me get the tweet out. All right, tweets out. Let me paste this into the True Trader chat. All right, what's up, everybody? Oh crap! Let me make sure. I think I have the wrong. There we go. Microphone. Had to switch it to the better mic. Hopefully this sounds okay. The mic looks like it's turned up to the right levels. Awesome. What's up, Grandizer? Trucking Fool, what's up, buddy? Hoping everybody is enjoying their weekend. It's funny, we celebrated my son. It wasn't his birthday on Friday, but we were on vacation, which is why we didn't have the Sunday prep last week. And so now that we're back from the vacation, we had our son's birthday party on Friday. And because we did something like that on a Friday, it made Saturday feel like Sunday, and today feels like it should have been Monday. Oh yeah, guys. You guys like the new shirt? And the Ricky Analog 5-panel hat goes hard. The new drip is awesome. Loving it. If you guys don't already know, you guys can get some of the True Trader swag. We have a bit of a storefront. I don't even know the link, but I'm sure High Trader will put it in the chat as well as maybe the description of the video. There's a few different shirts to choose from. There's some cool ones. Dun, 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 dun. The trip was good, Truckin'. Thank you very much. We were in St. Louis for my half-brother's wedding and saw like a ton of family that I have not seen in a really long time. And, like, people got to see my kids, which they haven't. Like some of my aunts and uncles and even my dad and his wife have not seen my kids since Ricky, my youngest, was like an infant. I think Kaya was probably like 2. She's 5 now, about to turn 6. It's just, time flies, guys. That's why so often you hear me talk about the importance of actually enjoying your life and not being so controlled by the screens, right? Like, there's a lot more things in life that are way more important than trading. Fortunately for you guys, since I've already talked at large length about that topic, it will not be what we talk about today, guys. So before I get started, real quick, if you guys can retweet the tweet I put out or share it on Insta or YouTube or Facebook or whatever social, TikTok, I don't care where you may have somebody that could find value in this live stream, send it out. Try to get as many eyes on this as possible. And we'll get it kicked off here. Just a second. Need to move some things around on my screen. Sorry for a second, guys. Hold on. All right. As always, guys, if you need a good broker, somebody you can trust, hands down best customer service in the industry, it's Cobra. There's a link for them in the description. It'll get you 25% off your commissions and 1 month free of whatever platform you choose to execute your trades through. Spike Eat, I use these guys to pull historical stock data in order to backtest edges. If you guys don't have a way of doing that other than doing it manually, which is how I used to do it prior to these guys, you should really check them out. There's a link in the description for them as well. Scripts to Trade, dude, I was working with these guys over the weekend. Honestly, my favorite group of people to work with. These guys, they're just amazing at what they do. They're responsive, they're accurate, they're thorough. I can't say enough good things about them, guys. Check them out. They have a ton of pre-made indicators that you can pick from, and if they don't have what you want, they will create it for you, and trust me, they can do that really well. Something I know you guys have heard me talk about, but I don't usually promote it on the Sunday prep, and I have no idea why, but I'm gonna start because, dude, if you guys know me, I constantly talk about tracking data, right? And we talked about spike heat. That's one way to do something like that. You can track data manually on Excel sheets, but typically when you hear me say that, I know you guys are thinking about tracking setups. But there's another thing you need to be tracking, guys, and that's your performance. You have to know your own trading metrics, how you're doing personally. It's one thing to know an edge exists. It's another thing to know that you're executing that edge. And these are the guys I use as TraderView. There's a link in the description for them. They allow you to use their product for free if it's just 100 trades or less per month. And you get the majority of their features, and then obviously there's tiered programs if you want to bump that up and add all the bells and whistles to it. But check them out, guys. Traders for a Cause, it's coming up at the end of September. It's the last week of September, first few days of October. If you haven't already got your tickets to that, I know they're selling out quick. It's an amazing event, and it's for an even better cause, raising money for cancer research, guys. So please, if you guys can make any sort of donation, please do. They do great work. And that's it. I guess, actually, sorry, earnings. Lots of big names reporting this week. You got NVIDIA, Salesforce. There's a lot of big names, so it should be a really, really exciting week. I'm looking forward to it, guys. It's the full 5 days, Monday through Friday, and that's it. Let's get this kicked off. So what did I want to talk about today? Every time you take a trade, it should be a non-negotiable that there's certain questions that get answered before you take that trade. Now, it's one thing to just kind of like be in automatic mode and just you know your process and you know everything, but it's important to know what those questions should be, right? So that's what I want to talk about today, is the questions that you should be asking yourself before you take any trade, right? And I usually try to freestyle these types of things, but I made a list, so I'll go down the list so I don't miss any of them. And I think there was about 6 of them that I wanted to kind of make sure I hit home on. The first one being, every time you take a trade. Now this might be counterintuitive, right? You're probably gonna be like, damn, that's kind of focusing on the negative. But the first thing I recommend you guys asking yourself is, what are the reasons I should not take this trade, right? It's a different spin on the question of does this trade check off all my boxes, right? You should have a checklist of things that each trade needs to check off, and right, like if it checks off every box, you could probably say, yeah, that makes it A+. Maybe it checks off 5 of 6 boxes, and now you're looking at maybe a B-, C+ trade, and that's kind of up to you if you're gonna take that trade. Maybe you need to acknowledge it so that you don't put full risk on because it's not an A+ trade. But you should ask yourself, does this trade check all my boxes? But I like to frame it differently. I like to frame it as, what are the reasons I should not take this trade? You should be always trying to shoot holes in your thesis. Look at it from the other side of the trade. Remember, if you're buying a stock, someone's selling it to you, right? What does the person selling it to you see? They obviously don't think it's going to go higher, or they wouldn't be selling it to you. So try to put yourself in the opposite side of the trade's shoes, which is another thing that we constantly do, especially at True Trader, guys. We trade those emotional moves, taking the other side, trying to capture those mean reversion trades. I like to know that the person on the other side of my trade is acting out of emotion, right? Therefore, I can step in, logical, objective, rational, take the opposite side of that trade and let them be the emotional party of this trade. So once you do that and you're thorough in asking that question, why should I not take this trade? The next thing you really want to ask yourself is, where am I wrong? And it's important that question comes first, first after the first question, right? So the next question needs to be, where am I wrong? And why am I kind of highlighting that is because a lot of traders tend to go, where could this stock go? Where could it get to? How much money could I possibly make? And they're ignoring the more important question is, where am I wrong? And once you answer that question, where am I wrong? it leads you to answering the very next questions that need to be answered. And that is, okay, if here's where I'm wrong, how much should I be willing to risk on this trade? Now, it's very, very important to be super honest with yourself. I've worked with a lot of traders over the years, and a lot of them suffer from this issue where they think they're okay risking X amount of dollars until what? Until they're staring that loss down, until they're looking at that unrealized loss in their P&L, and they realize they're not okay with that loss, right? So be very, very honest with yourself. How much are you legitimately okay with losing? Because when you take a trade, I always recommend people put the trade on and just assume you're going to be wrong. It's so much easier that way to go, look, like if I'm willing to risk, let's just say $500 on this trade, right? If I'm wrong, I want to be okay losing 500 on it. When I put the trade on, I want to act as if I just threw that $500 away, as if I just lost, I just spent it, it's gone. And that way, when you are facing that loss, it's very, very easy to just clip the trade, be done with it, and move on. And then there shouldn't be these emotional ties, okay? The next question that needs to be asked, once you understand how much you're willing to risk and you know where you're wrong, is what position size will put me in that position where that's my risk? And, this is another one of those things where I work with a lot of traders, and a lot of them don't do this meticulously, right? They just kind of spitball it. They're like, I think I'm okay risking $500, and I'm I should be risking I'm going to be wrong about a point from where we're at, right? So if I'm going to give it a 1 point stop, it's 500 shares, and I'll be risking that $500. But really, adding in the possibility of slippage, and maybe, giving it some wiggle room under a half or a whole dollar number or whatever, oftentimes what should have been a $500 loss and the right position size turns into $550 loss, a $600 loss, and there's just this sloppiness. Stop being sloppy. Figure out your position sizes so your risk is capped, and be like, take this serious, guys. This is a business, right? We're not out here, this isn't a hobby. We're not out here winging it. I want to be putting on my position so I know what my risk is, okay? The next question you should be asking yourself, once we know the position size, once we know where we're wrong, once we know all the reasons we shouldn't take the trade, we've still decided we are going to take this trade, is where are my targets? Now, you need to make sure that this is done rationally, objectively. These targets need to be attainable, and it can't just be a pipe dream. You can't be like, well, and you can't just look at something and think, oh, I want to make 3-1 or 4-1, and I'm risking a point, so my target is 3 points away, 4 points away. You have to look at the chart and say, where could this trade legitimately get to? And then you need to ask yourself also, right, is that risk reward going to give me the positive expected value outcome of this trade, right? It's okay to have a trade that's 1-to-1, but you better know the win percentage of that trade, and you better know that a 1-to-1 is going to produce positive results over time because of the win rate. And you can also have, you can have a really low win rate. You could have a trade that only works, 25% of the time, 30% of the time, but the risk reward is adequate. But you cannot reverse engineer that and do. You can't let the dog wag the tail wag the dog, as they say. You must understand that the reward and the possible risk are not determined by anything other than back-tested systems, right? We need to make sure that all the work that goes into answering these questions is done when the market's not open. When the market's open, you should already have the answers to most of these questions, and now you're just tailoring them to that specific trade, right? This setup has this defined target, and I'm wrong here, right? And that's where you generate the ability to act almost automatically, right? Almost without having to give it too much thought. But it's, you can't just look at something and be like, well, I'm risking a point and I need to have 3-to-1 in order for this trade to have a positive expectancy. Well, guess what? The stock market doesn't give a shit about where your risk is and where where you would like it to go so that you get 3-1. It does not care. You need to be asking, like, can it go 3 points in my favor, therefore giving me 3-1? And is it rational, objective, and not just a pipe dream? Is it back-tested systems that tell me that this is where this price should and could go? Let's see. Okay, and then the very last thing I really think people need to be asking themselves right before they put a trade on is be very honest with yourself and ask yourself if you're chasing. Is this the ideal entry? Maybe you saw the trade unfolding, you hesitated, you didn't pull the trigger, and it goes a bit further, and now you're about to hit the button, and you're, what should have had a great entry with great risk reward and asymmetric trade becomes some really just a chase, right? FOMO entry, you're like, I shouldn't have hesitated, but you still want to be in that trade. So you need to understand that even though you might have answered all those other questions to the liking of putting that trade on, that trade still might not deserve to be put on if it's not the ideal entry. So those are the questions that need to be asked, right, before you put on any trade. Now, one little thing I wanted to add to this conversation, and that is there are some questions that you may find yourself asking that you absolutely should not be asking. They should not creep into your thoughts while you're considering putting a trade on. And one of the major ones is, will this trade help me make back some earlier losses? Should not enter the realm of your thought process while you're considering a trade. Every single trade needs to be thought of in a vacuum. They are not, your past losses or P&L. Like if you have some cushion, right? Sometimes you might have some cushion, and you're considering, crap, do I want to risk giving back some of my P&L today? You shouldn't be thinking about that, right? You should be looking at this trade. It should have its own validation for taking that trade. You shouldn't be thinking about making back losses or giving back P&L. Every trade needs to be able to stand on its own 2 feet and pass the smell test, right? And then the other one is, you should really not focus on how much money I could possibly make on this trade. It's one of the things I see people doing that gets them in the most trouble, and that is just this dollar signs dancing in their eyes. Oh my God, man, if this trade works, I'm gonna make so much money, right? Usually what that leads to is people being oversized, and you're not focused on the risk. You're not focused on how much am I gonna lose if this goes south on me, right? And that always needs to be the focal point. The focal point needs to be the risk, not the reward. It's not to say you shouldn't look at what the risk reward is, because that's a very important thing to distinguish the difference between focusing on the possible reward and weighing risk versus reward. 2 completely different things. One you should always consider, and the other you should not consider at all, right? All right, so that's it, guys. I just wanted to touch on that before we get into the actual Sunday prep. So let's do it, guys. Neither I, True Trader, or any of our representatives are registered as security broker dealers. I'm not a licensed financial advisor. Anything you hear me talk about, guys, is for entertainment purposes only. It's not a solicitation to buy or sell any stocks. It's just my opinion, and like I said, it's for entertainment. So let's do this, guys. Let's get into it. Here's the broader market. You guys see I have some squiggly lines drawn on there. I'll explain those here in a second. The first thing I noticed when kind of digging into the weekly chart, let me actually, you know what? We're going to get rid of this drawing because it's going to distract me from the thought process. And we are going to do a little bit differently today, guys. So I have notes that I wrote down on the broader market, but when we get into the sector analysis, I'm just going to freestyle it because I actually think it works better that way when I give you my honest first thoughts when looking at those ETFs and those sectors, right? So when we get to that section, it may seem like it's a little bit different. But the first thing I notice when I look at this is the weekly candle is a pretty ugly weekly candle after a pretty big move up. You had 2 weeks ago, right? We had the little bit of a stutter, kind of sideways action, a narrower range than what we've been experiencing, right? But we sped back up, had a big range week 2 weeks ago, and then last week we had this, we tried to go higher, but then we slammed back down. So basically, what I'm thinking here is I want to be short bias as long as we are trading under last week's highs. You know, in terms of what the author here is writing or what needs to happen, this is still, even though we're way past the weekly 20, right? This is still the first push into that weekly 20. Remember, we had the same thing happen up here. It didn't go quite as far through, but you know, we still pushed through the weekly 20 before coming back under, making a lower high, and then rolling back over. Okay, so this to me is still the first push through that weekly 20. And what needs to happen for me personally for any sort of meaningful reversal on the higher time frames, namely the monthly chart, is we need to see on the weekly chart the author try to hold this downtrend on the weekly time frame. You know, as long as we're trading below this 4630 area or whatever, that's not accurate. I guess I can give you 4631. As long as we're below 4631, which was the last major lower high, we still could be putting in the next lower high, right? Does that make sense to you guys? Until we're above this level up here, this still can be a lower high. And in fact, if we look at the monthly chart, you'll see we still could be just putting in a lower high on the monthly chart. What really needs to happen for me personally to think about any meaningful reversal on that monthly time frame is for on the weekly time frame the same thing to happen that we had happened on the daily time frame. What was that? Does anybody remember? It's a very simple process, but I know people get really confused when we go over this stuff, right? We're holding a downtrend. We're holding this daily downtrend. The daily downtrend needs to attempt to go lower and fail to do so, which was what we had happen over here. You know, we had this attempt to go lower right here back on July 14th, and it never made new lows. And after that, we had a subsequent long trigger, which got us back to the weekly time frames trend, the weekly 20. Now, again, we've gone through the weekly 20. That doesn't matter to me. So if we apply what we just said about the daily time frame to this weekly time frame, what needs to happen? We need to attempt to go lower. That doesn't mean we're going lower, but we need to attempt to. And the only way to do that on this time frame is for us to get a lower high followed by a lower low, a continuation short trigger. And then when that happens, keep in mind, this is going to take more than just 1 week to happen, right? This is why, let's get back to why I had that drawing here, right? In order to get that continuation short trigger, what it's going to look like is this pushing up, making a lower high. I'm just scribbling these circles. I apologize, guys. And then taking out this push back down lower. So this. Now, if this happens, if you get this push up, lower high, and then breaking this intermediate low and we come lower, what this will create is the possibility of a higher low on the monthly chart, right? We need to take out this month, which if I'm not mistaken, this is the last week of trading in this month. Maybe we'll have a few days next week, but next week will bring us the beginning of September. So we need to take out August's lows in order to possibly have a higher low forming on the monthly chart. But keep in mind, if we start to break down like this, it's really going to look like we just did put in that lower high on the monthly time frame, right? But why do I emphasize this so much, guys? Well, let me kind of explain my thought process on it. We know that this is going to take multiple weekly candles to kind of unfold, if it's going to, right? So if we do get this pullback here, this kind of pullback, and I know what needs to really happen still for us to actually attempt to go lower, then on this first pullback, I definitely will not be scared to put on long trades into support. We have built a ton of support below us from the recent price action over the last few weeks. So on pullbacks to those adequate substantial levels, I want to be having a list of trades that look like great longs. And I'm not talking about swing longs, like long-term portfolio stuff, no. But I am talking about day trades, and I am talking about possibly even 1 to 3 to maybe even 4 or 5 day long swings, like shorter term swing trades on pullbacks to these levels of support. But remember what I first started off saying was I want to be short biased as long as we're trading below last week's high. So any pops back into last week's resistance, I'm looking at shorts. I'm not looking at any longs really until we get a pullback. And let's go into the daily chart so we can see some levels. Dude, those squiggly lines are cracking me up right now. I gotta get rid of them, guys. Hopefully you guys don't need to see those to understand the concept that I was highlighting. Let me get rid of these. Well, no more, sorry. Okay, so pullbacks to support that I'm considering where I would, okay, is this the area to get long? The first level where I really, really want to be patient for is going to be down here in this 4070 area. I have support marked out here. Obviously, we have the 20-day. There's some levels here at this 41. Might as well here. Let me just read off the levels I marked out for you guys, and then we'll talk about them. Okay. So the key support levels I have marked. Let's look at a intraday. Use a 2-hour. Okay. So why do I have this level marked here as 4130, and I said slash 20-day, and I literally have a note that says, yes, I know the 20-day is quite a bit higher from this 4130 level. Obviously, I will be watching price action on a pullback to the 20-day. But why do I want this 4130 level? It's because it's where this pullback here pushed up, made the higher low, and then we broke. You guys hopefully are learning to see these without me doing it for you every week. But in case you're new to this or you just need a little bit more practice seeing them, this trigger right here is what I want to see a retest of. 4130. That's the first level I really have marked. It's not the first level where I actually am anticipating wanting to get long a bunch of stuff that looks like it's holding really well. That level is going to be down here. This 47, what I write down? I'm looking for my notes. Sorry, guys. 4070 is, and I wrote where I would start to be stalking the longs. Below that is the 4,000 level, and you have the quarterly and the annual pivot right there also, and a monthly pivot. You literally have a ton of stuff all right around that psychological 4,000 level, okay? So 4,000, obviously there is this 4,017-ish level, but I'm just going to group it all as a range, right? 4K. And did I write anything lower? 3950, which is going to put us up into these lows back here. And the 50-day, that's the other thing in that area that I like. But those are the levels of support I'll be playing. Keep in mind, guys, even if I buy flushes on emotional moves into this 4130 area, that's not the spot. That's not the spot where I get super excited for the longs. That's further down here at this 4070 area. Okay, on the above that, I'm looking for. Let's see, I just want to make sure I don't miss any of them, right? Key resistance levels. First thing I wrote down is 4,300. And if you look, here's your failed breakout. This is where we failed to go higher, right into the 200-day, the lower high, and then we rolled over, right? So that was your trigger, and then the first retest of that rejected really, really convincingly. And then we made a lower high, and then we kind of sold off. So any kind of rip back up into that level, that 4,300 level, that's where I'm really looking to fade. Obviously, the previous week's highs is the next spot for me, which I'll just be accurate for you guys. Let's see, 4327.5. Above that, I have 4370 and the quarterly pivot. And then above that, I believe it's much further higher where I care. I wrote down, if I had to give you two higher levels, it would be 4450 and 4500. Okay, so 4450 got a monthly pivot and some prior price action, and then 4500 previous quarterly pivot, this recent high up here. Those are the levels where if I had to give you higher levels, but I really want us to stay underneath last week's highs so that I can kind of have the ability to lean into the short ideas. If we continue higher, we break above last week's highs and we start to hold, I think we can just continue higher. But at the same time, you know, as we just continue to grind higher and higher and higher without any meaningful pullbacks, it becomes much, much harder for me to try to be long biased. I don't want to get into that mindset of keep buying the dip, and then we finally get the big sell-off that I've been waiting for, and I'm bagged because I was buying the dip way higher, and I don't want that. I want to be patient for the bigger pullbacks for the longs. I think anybody kind of buying up here, especially when you look at some of the stocks like Apple or whatever, I feel like you got a lot of people FOMOing in because they feel like they missed the bottom. And that's hopefully you guys have been following long enough, right? Like, understand the way stocks move, understand what we're talking about here, like what needs to happen on the weekly time frame, what needs to happen on a monthly chart. If you start zooming out, it takes care of some of that FOMO, right? If you look at this monthly chart, I have zero reason to want to be getting long up here. I want to watch for a monthly candle to break the low of the previous month and give us the ability to at least attempt to put in a higher low on the monthly time frame. If we can roll over, break August's lows in September, or maybe September narrows the range considerably, and then October we roll over and try to test like probe lower. If that happens, then we're coming back into levels of where there's tons of support from people that were buying at different levels on that way up, and we're getting better prices and we didn't FOMO in. I think up here is just, you're begging to just get bagged up there. I'm not a buyer up here. As long as we're under last week's lows or highs, I'm leaning short. If we get above last week's highs, obviously day trades will be day trades, right? Emotional spikes and flushes. If you're over the true trader community, I'll be in there trading them, making my, taking my pay cut and going home. I don't need to be looking for swing longs up there, and maybe swing shorts if we start to see other things develop, but not even in the conversation yet until those things start to develop. So that's the thoughts on the ES. Let's look at the NQ. Obviously NQ broke this downtrend line. Again, I tell you guys this every week. These are more so just visual guides for me. They're not like written in stone levels. Like, I don't care that we got through that level. We're still holding. If you look at the daily, you can see even though we broke above this 13.5 area, we couldn't hold above it. We came right back under. So same thought process on the ES applies to the NQ. Above last week's highs, and I'm going to be kind of a little more hands off and watching things. I'm not going to chase anything long up there. Below last week's highs, I'm leaning short. Pullbacks to levels like this 12.9. I might as well just read you the levels on this too, okay? Key support, 13.1 and the 20-day, which is a retest of this trend line that it broke, and it might be a bit too close, right? I'll see. It'll be something I'm watching. Obviously, I'm not trading any overnight sessions, and in fact, I'm not even trading the indexes at all. I'm just using them as kind of like guides for my actual equity trades. So even if we open up down here tonight when the overnight session starts, it's going to really depend on where we're trading when we wake up in the morning tomorrow, right? So, if we're below this level, then that doesn't even matter to me. The next level below that's going to be this 13K, which is your psychological level, right? So I wrote down 12.9 to 13K, just that kind of range. That is where I start to get same idea I had with where would I get excited about longs on equities. This 12.9 area is that level for the NQ, so the tech stocks, right? Below that, 12.7. I'm just going off the chart. I'm sure that's what I wrote down. Yeah, it is 12.7, and then below that is 12.275 in the 50-day area. Okay, so you can see I have that marked. It's going to line up with a retest of this level, which was where that long trigger occurred, and it's going to also kind of line up with this a bit of this up trend line. But honestly, not sure we're going to get down there that low this week. There's so much support between us and there. Again, that 12.9 to 13K level is where I'm going to be watching to see the price action and see if things start to hold, and then possibly looking for those long ideas. On the short side, remember, I want us to stay below last week's highs. The first level I'm looking at is this 13. Let me see what I wrote down. 13.358. I'm pretty sure that's going to be based off. Yep. So if you look at this 5-minute chart, notice how on Friday we had that big push off the open, it was just a failed breakout that slammed down. We have not retested that level yet. If we gap down tomorrow and shoot up into that level with a big fast move, I will be looking for short opportunities into that 13,358 area. Obviously, the next level right above that is going to be this 13.4, which is going to put us into those. It's going to put us right into the annual pivot as well as where those highs kind of stuffed. And then above that is going to be this 13.5 area with the monthly pivot. And again, a key level, right? You guys got to understand how these key levels are developed. You get these pushes up here that they just basically fail to get any sort of momentum to the upside, and then they roll over. And you can see once we got below that level, we retested it once and we haven't tested it since, just selling off. So any kind of rips up into those levels, the first test, if it happens fast and emotionally, I'm there for the fades. And then above that, see, we have 13.6 and then previous week's highs. I don't really want to see us trade above last week's highs and hold. If we do, just like what we talked about with the ES, okay? Let's get into crypto real fast. Here's Bitcoin. Guys, the only thing to really talk about with Bitcoin was the fact that it stuffed that 25K level we've been talking about. Yes, technically it's still just noise until we get either to the target, or a failed long trigger would mean breaking below this, what's the exact level? 17,567.45. Below that level is a failed long trigger, meaning this could really start to unwind. Now, if I wanted to get long on flushes or get short on pops, the levels I'm looking at, I did write down a few for you guys. 23,650 is where I'm looking to fade anything in the equity sector that follows Bitcoin if Bitcoin pushes that level. And then 19,000 is the level for scoops. You guys can just see how that's where it was putting in those higher lows before it triggered higher. So those are the two levels if you wanted to play the channel that it's trading in. But again, if you're looking at the bigger picture or asking yourself, like, can crypto go higher? Can crypto go lower? Which is what I think most people want to know. It's right now in this channel that is trading, it's just noise, right? I guess you'd hear a lot of people call it chop. This is just sideways action. It's not attacking the target. Remember, the target is a weekly 20. It's not attacking it, but it's not really breaking down either. It's just kind of going sideways and letting the weekly 20 kind of catch up to it. All right, so that's the broader market. Let's hop into our sector analysis real quick. Here's your barchart.com matrix, the short-term matrix to see the sectors. The one that stands out was the consumer staples. We'll definitely talk about that. Utilities, again, we've talked about this week after week after week, right? Like, if you want the bear market to end, you typically don't want to be seeing utilities be this outperformer, which it is. Communications was had the weakest of the sectors, and then followed by the materials. We shall look at these ETFs and get into it. Remember, I'm going to freestyle these. I'm just going to tell you my thoughts when I look at them. Okay, so remember, we saw this in the broader market too, is these ugly weekly candles, right? So it's not going to surprise me to see a lot of these same kind of candles on your ETFs as well. So this is retail, obviously another ugly weekly candle. Let's look at the daily real fast. So I think there's two ways to play this sector. I think there's definitely support down here, obviously the 67 area, which was a retest of the breakout. But I think if instead of flushing down to those levels, if this somehow holds here and pushes back up into 74, 74.50, there's probably some fades as well. So I can see both sides kind of being nimble bias on something like retail here. Financials. This one is behaving really well. Again, we've talked about this week after week after week of the fact that it held right here, had the failed breakdown followed by the long trigger, and it's just been up, up, up. Now, definitely rejected a key level. Got the ugly weekly candle that we've been talking about. What I would like to see happen is this to try to get some sort of short trigger and come back down lower and finally give us a retest of some levels so we can see if those levels are going to hold. Because if this sector has been performing really well and the price action's been very conducive, then I do want to see if it remains that way on these significant pullbacks. So anything down towards this 3260, 3270, the 50-day, or even this 32.20, which was the breakout area. I want to see if the buyers show back up, because I would be looking to put money to use on the long side in this sector. I also think, just like we said with retail and any other name, any other sector that has that weekly candle that looks like what we just looked at on these last two, you can also play the short side on pops back into basically as long as we're trading below last week's highs, just like we said with the indexes, right? So real estate, again, I don't trade this one much, but we definitely broke above a key level. We're pulling back. We'll see if it holds the 20-day. It's kind of what I would call strangled, right? We're just trading right below the 200-day and right above the 20-day. So it may kind of get put into a bit of a channel here. We'll see. Again, I don't really trade. This is not a sandbox I play in very often. All right, this one, trending well, holding the 20. We did get above that 134 level. We closed above it, but the next day came right back below it, right? So it's still showing the inability to hold above that key level. A break above 134.50, and then I'd be looking to buy dips back into this 134 area if it's going to hold. I think I have a name on the list this week that's from this sector. Yeah, in fact, I know I do. And you could still look to buy dips versus call it 130. You could buy dips back into 131, 130.50 versus 130, which you have this level that's been holding, right? Materials. No, I hit the wrong one. Materials. Here we go. Materials got above. It reclaimed this key level, right? Now, granted, it had a rough week last week. If we look at the weekly candle, there you go. But it's going to retest these key levels. So again, this is another one where, again, I don't play in the sandbox very often, but I would be willing to look around for possible setups if it wants to continue to hold this 78.60 area / 20-day. Industrials. This one obviously rejected this trend line really pretty convincingly, but if pullbacks hold this 97.50 area, a break back above last week's highs could kind of send this thing. It would be reclaiming that psychological 100 level, be breaking out of this kind of this downtrend line, and it would just have put in a higher low, right? But let's look at the weekly chart. Again, I think any kind of pop into those back into last week's highs can be played as a fade as well. Again, it's just not a sector I trade very often. There's not a whole lot of, and I think that's something we should probably talk about real quick. I say this a lot and maybe don't explain why. Why is it there's certain sectors I don't trade a lot of? Well, it always comes down to the individual names that make up those sectors. There's two things I always require of my stocks in order to make it a desirable trade: liquidity and range. There's just not a lot of companies that have a ton of liquidity and range in these sectors. Like if you go look at certain names in certain sectors, you'll see you can, and here, we'll just do it. We'll go quickly to the bar chart and we can just show you guys. So if, let's say we're looking at materials, go into the materials sector here and we'll sort by volume, okay? So FCX, I trade FCX, okay? FCX has liquidity and typically has decent range. So you can look at this. Let's look at the daily chart. And you can see it's holding pretty well. What I like to look at is the average volume and the range. I typically like to see more than $1.50 ATR, but on a $30 stock, $1.40 is going to cut it. I will trade that. But let's go back to some of these other names, right? Let's look at AMCR and IP, and we'll see. So here's one. This is AMCR, and it's liquid, right? 9 million shares traded on Friday, but look at the range. It trades in a 32-cent range. I don't want anything to do with that. And that's typically what you'll see when you hear me talk about sectors where I don't trade a lot of names in that sector. It's because the names that are liquid have no range, and the names that have range don't have liquidity, right? I need both. So that's what I mean when I say that. I think that was probably something I should have established a long time ago. Finally hit me just now that, oh yeah, maybe I should say that. Sorry, let me get some water. All right. Utilities, again, remember what I said, guys. This thing has just been up and away. It's not typically what you want to see in a bull market, right? This is typically utilities and like defensive stocks and a few other sectors, they're usually the outperformers in a late market cycle, in the bear markets. They're, so to see it up here like this doesn't make me think that we're coming out of the bear market yet. I think there may be some fades on extensions, but I wouldn't look to buy this or get long this sector unless we pulled back to maybe retest this 75 area. 75 to 74.75, which is going to be down by your 20-day. Again, there are a few names in this sector I'll trade, like Duke or AEP or a few others, but like not a ton of names to choose from that I like in this sector. Consumer staples. Now, I trade this one a lot. There's a lot of names in this sector that I like. What I'm looking at on this, and you see I actually have an alert set on this one. It says support / stock longs. Pullbacks to this level, this uptrend line they reclaimed. Let's look at the weekly and you can see that. So this level here was something that was pretty good support for this whole way up. When we broke it, I didn't think we were going to reclaim it. We reclaimed it. As long as we're holding back above this trend line, I kind of want to watch to see what happens when we dip back into it. So you have a support level here at 75. 75 is a psychological level. You have the 20-day and you have that uptrend line. So dips back into that area, that's where I'd be looking to get long. Obviously, if it just takes off from here and gets extended back up into these 80s, I'll probably look for fades. Consumer discretionary. This is a sector where I definitely want to look for fades on any kind of pops back up into last week's highs. Whoops, I didn't mean to go to the next one. Thought process there, and yes, I see longs, right? You can get the pullback to the annual and the 20-day right there at 164 and possibly even 161 for longs. But if my thought process is that the broader market needs to at least attempt to go lower, then when everybody is rushing for the exits because they think that the bull market rally is over or the bear market rally is over, the things like consumer discretionary are going to be the things, in my opinion, that get sold off first, because by nature it's consumer discretionary, right? If inflation's a problem and people don't have excess money to spend, right, what gets cut out of their budgets first? It's the discretionary. All right. So yeah, pops back into last week's highs or levels of resistance from last week are where I'm looking to fade names on this sector. Communications. Again, we talked about how this one really just relative weakness. It just couldn't get going. It finally got going. This was when I was on vacation, right? It did get broken out of this consolidation area, and it's selling back off, and it's coming into support. Again, I don't like this sector. It's just been overall one of the weakest sectors during this whole bear market. So it doesn't mean that can't change, but it needs to prove itself to me, right? Like, first thing I'd like to see is a retest of this 57 level and have it hold, and then maybe start going again. But until I start to see things like that, I'm really not that interested in longs in this sector. I think pops back into last week's highs offer opportunities for fades as well in here. All right, Biotech really stuffed this trend line. If this clears back above this 95 level, this 95.30 or whatever it is, that puts in that higher low, and I think the trend can continue. And the fact that we're just really going to be breaking out of that longer term downtrend could get this thing going, like ignited. So we'll see. If it flushes down in this 81-ish area, the 50-day, that's where I'm looking to be scooping as well. But if we get above last week's highs, I'm looking to buy dips in that sector. XLK technology. This one, I want to be shorting pops back into last week's highs. This one just had the short trigger, guys. Let me get rid of some of these lines. And find my circles. Hopefully you guys already see this without me having to draw it, right? I think a lot of you guys have been following me long enough now. You're starting to see these, right? So there's your short trigger, was the break of, what is that, Wednesday's lows. And so right now, it just triggered on Friday. I'm looking to short any pops back into resistance because we still have room back down at the 20-day. And of course, we were just talking about what we thought about the broader market. This sector is going to have, this is one of my favorite sectors, right? Because what did we just talk about creates a sector that makes it so I don't trade very often? this sector has all the liquidity and all the range, right? So tons of names to trade in this sector. XLE energy, this thing, remember we talked about it, finally had the higher low on the weekly chart, and then on was it Friday? Let me look at the daily. Yeah, no, Thursday. On Thursday triggered the long. So that's the ability to hold trend and continue higher on a weekly time frame. Will it get back to those highs? I don't know. I think on extensions we can play the short side. I think on pullbacks you can play the long side. But overall, the bull market in that sector is still alive and well, and same with oil. So again, you know, when things are behaving really well and trending very well, those are where you should be aiming to put your money to use on the long side, while everything else has just been in a perpetual downtrend, right? So keep that in mind, guys. Like, even if you're looking to fade some of the oil names because they get extended, you're really going against the grain, right? This thing's been in this really nice long uptrend for quite a while. And if you're just fading those moves, you're missing a lot of the easy money, which is buying the dips back down to the black and white, objectively smart areas to be buying these things. And you wouldn't be like fighting the smart money, or you'd probably find yourself swimming with the current. So let's get into the actual ideas. That's the whole sector analysis. Hopefully that made sense to you guys, because as I said earlier, I just freestyled that because I get tired of writing notes on every single sector when I know the notes I write are literally what I say in my head when I see the sector, right? So the notes that I write that you hear me talk about every Sunday on the Sunday prep, those start out as just my freestyle thoughts anyway. So it makes no sense for me to do all this extra work and make these notes when I'm literally just typing out stuff that I'm thinking out loud. So let's get into the long ideas, the long setups. We always start with strong stocks looking for continuation. The first name on my list, remember I told you I had something from the healthcare sector, and that is CVS. Let's look at a daily chart. CVS, I'm looking for a flush down to the psychological 100 level. I will get involved probably if we can get there in an emotional manner straight to the 20-day and that monthly pivot up at 101. You know, if it goes a bit through, we come down, test 100, I'm not going to be like shook out of it. I'm going to wait to see, you know, something to risk against. I'm not just going to be, you know, standing in front of a train or a steamroller. I'm going to wait for buyers to show up and show me some support first. But I really like the look of that chart. I really like that level. And it's the, you know, three things there. You got the monthly pivot, the 20-day, and the psychological round 100 level. So that's the idea on CVS. Next idea is CVX. Now, why would I be looking at CVX other than the fact that this chart is freaking gorgeous, right? We're getting really tight, making higher lows, definitely a nice little pennant building, and you know, there's some really nice key levels here, and we can look and see it on the weekly chart as well. Now, you had an inside week 3 weeks in a row, okay? 1, 2, 3, all inside weeks. So that just shows you compression. It just shows you the buying getting really tight. Makes me think we're set up for an explosive move. What I would like to see is a break of last week's lows and hold to put in that higher low, but I don't need to see it. I would like to, but I don't need to. But why else would I be looking at CVX? Did anybody see what happened with OXY on Friday? The whole Berkshire Warren Buffett news, okay? Like, look at OXY. OXY ripping, right? On news that Berkshire and Buffett want to acquire up to 50% of the stock that's available on there. Well, guess what else they own? They own CVX. And if a chart is getting that tight like that, and you know it's associated with Buffett, and Buffett just moved Oxy like it moved, I want to be watching this like a hawk. So want to make sure I give you guys the notes I wrote down on it. It says 3 ways I am considering playing this. Scoop an emotional flush off the 20-day / quarterly pivot. So any kind of flush down here in this 155.50 area, I would, now that might be a little close, right? If that doesn't work, I have no problem stopping out and revisiting it down in this 153.50 area where you got the monthly pivot, and is that Monday's price action there? Yeah, Monday's lows. Now, remember what I said. I would like to see us actually pierce through those. I would like to see us get just under Monday's lows, kind of failed breakdown, then the very subsequent or ensuing long triggers where I look to get long. So, you know, stalking this like crazy. There's a lot of different ways I'm willing to get involved in this. And the other thing I wrote down was over 161.16, which is this high here. Over that should send it. It's an anticipation of the break of this 164.66. So, you know, I definitely, if we get over, and in fact, I'll just set the alert right now so you guys can see. If we get over this 161.16 level, I want 3 cents to print above it. If we get above that, I definitely want to look to buy dips and join trend. But I'm also going to be watching to see if we can just break Friday's high day in order to anticipate. So the high day was going to be this 159.74. So I'm also going to set an alert up there. Let's do I'm just going to put half send it. I'll just give it to the end of the week. Actually, I need to change this one too real fast. I don't want these alerts to be old and stale, right? This should happen relatively soon. So those are what I would be looking at. If we get over Friday's high day, I'm probably going to be looking to join trend and I won't be full size. I'll just be kind of like dabbling. And if it starts to hold higher lows, maybe add a little bit more, but really what I want is over that 161.16 and then on dips add more and just build into that full size with cushion and then possibly get the bigger move. But I think CVX is nice and tight and ready to go. So that's the idea there on CVX. DLTR. Now, some of you guys might remember, I don't remember what week it was, but I was thinking under 153. It might have been back here. It might have been back in here. I was thinking this might roll over, and it was on my list of things to short if it was an if-then statement. It was under some level. I don't remember what it was. If this, then that. But it never did that. And here it is on my long list ideas. The reason I'm highlighting that is to show you that there's zero ego here, guys. I don't give a shit if I was wrong on an idea, right? I didn't lose any money because the if-then statement never triggered. And even if it had, let's say it triggered and I lost money. I don't have an ego. I just want to be able to make logical, rational decisions when I look at a chart. And if something I thought looked like a short 2, 3, 4 weeks ago looks like a great long, I'm not going to keep it off the Sunday prep just to save my ego, right? That's not the way this works. This is just like CVX. You know, we got this really nice tight flagging pattern up here, kind of just surfing on the 50-day and the 20-day. And I don't want to miss this trade if this goes, right? So we already have the higher low over 170, over 170, 139 should send this one. What did I write down? Let's see. Yeah, I said over 170, 139 for full send, but can be anticipated over 169.79. Getting really tight up here. Oh, they report on Thursday before the bell, guys. Make sure you understand that. They report before the bell on Thursday. There's no way I'm carrying this into the numbers. Right? I'm not going to swing this into the print. But this is my more of an earlier in the week trade if this sets up. Let's see on the daily. 169. What did I say? 169. Where was it? 169.79 is where I might anticipate it and get long on dips. I'm not really looking to buy this one on flushes. I think you could if we flush down 163, 164, but that's not what I really want to see on this one. This one I just want to see. I want to see the break of this little flag here, and that's it. So now keep in mind, guys, this trend line here is not what makes me like this chart. I draw that so you guys can quickly see that and visualize. But what I like about this chart is the higher lows and the looming trigger, right? So over this really already kind of triggered it, right? We broke that. It's really kind of already valid, but we are still kind of putting in the lower highs. So because of that, I'm going to play off this higher low here, get tighter risk reward on it. And over this high is the one that's really going to send it now, okay? So this is like a setup. This is like a tighter, same setup, right? It's what we call an anticipation setup, because the full setup was already here. The pullback, the push up, the higher low, and then the trigger. But now we're kind of consolidating, getting tighter, and you're getting a little setup within it where you can anticipate. So that's why we really want over this 171.39 to really send it. But I want to be 169.79, which is Wednesday's highs. Over Wednesday's highs, and I'm looking to buy dips, right? So that's the idea on Dollar Tree. DLTR. Remember, earnings Thursday before the bell. Okay. Last idea in the longs, guys, is IBM. I am kicking myself over not buying this sell-off from the earnings. Dude, people talk so much shit. Oh, they're, like comparing the price to earnings ratio and like how trash this company is. They can't believe it's still trading up here. Don't listen to the noise, guys. Just read the damn chart. The chart is freaking so obvious on this. I can't believe I didn't buy that, right? But this one, I've talked about it a few times during the Sunday prep. I want this in my long-term portfolio if certain things happen. But I don't, I'd like to see the broader market build a base, start to get broken out of this bear market that we've been in before this triggers, to give me more confidence in putting it in my long-term portfolio. But this reminds, and if you haven't seen the previous Sunday preps where I talk about IBM, I liken this chart to XOP and XLE, the energy and the oil ETFs, before they broke out of their long-term downtrend. Look at these charts. The monthly chart on XOP, just this really long downtrend was holding. You get the higher low and the higher high, and then we off to the races and holding trend. Same with XLE, okay? XLE, no different. Downtrend broke, and then it's been off to the races. So IBM has that same look. It just, it's just flirting with that breakout. And that's why I have this thing marked over 146.15, I think. Let me just be accurate. 145.99. So over 146. And I think this thing's going to go. But I should already be buying these dips. I should have bought that dip from the earnings sell-off, because the risk reward was so much more asymmetric down here. And you didn't even have to buy it here. All you had to do was watch for this pullback, and it put in a higher low, and the trigger was here over 129.27, and you're trading 10 points higher already, right? But bygones be bygones. We don't let a missed opportunity make us stop looking at a chart, right? I still want to be watching this for a 132.60-ish retest, the 20-day. You can just see this level here too, okay? So any kind of retest of this level down here, I kind of want to be looking to buy a scoop on it, or buy a flush on it. Let me make sure I have the pivots. Monthly pivot right there, 132.60 as well. So that's the IBM idea. No, that was the only note I wrote on. All right. So the next section I usually do is oversold reversion setups. Nothing notable. Again, I'm not going to force ideas. If there's nothing there, there's nothing there, guys. So now we're going to go straight into the short setups. Weak stocks looking for continuation. First name on my list, TDOC. TDOC. Any pop back into this 20-day, guys. This 38 level. I want to be fading that. This thing, this day here where you had that failed breakout that slammed back down, lower high, lower low, and that's also what was the trigger, right? Look at that. And now that's your 20-day, your 50-day, and that monthly pivot. So any kind of spike up into that 38 level, I want to be there for the fade. I think this one might be something that's later in the week. I don't think this is a Monday or Tuesday trade. It might be. And if the earlier in the week it happens, the better, because that means the move back to that level had to be that much more extreme. But I am definitely watching for that 38 level on TeleDoc. Next idea in this section is coin. I'm looking for a retest of this 82 to 83 area. Basically the breakdown. This thing looked like it was going to go, and then the fail on Friday. I think you probably have a lot of people stuck up there. I think the first pop back into 83 is a fade. Next idea is Dash. Same concept. Lost it, and we had this short last week. Worked out beautifully. Now any kind of pop back into those levels. 73 I think is what I wrote down. Let me see. No, 70 to 71 for a fade. So the 50-day, and you can see it was also the breakdown area of this low. Guys, you guys got to learn to spot these setups. They're super easy to see. Just got to learn how to read a trend, right? If you don't know how to read a trend, come over to True Trader. Literally, it's one of the most important concepts in trading, guys, is to understand how to objectively read a trend. This attempt to go higher failed when you get the lower high and then the break of that 71 area. So any kind of pop back into that level, which we haven't had yet, the first retest, I want to be there to fade that. Any kind of spike. And trust me, what's the range on this thing? $5 range, right? So we're trading at 65. Closed at 65 on Friday. So if it spikes up in the 70, 71, we've traded the full ATR, the average range of that name, right into resistance. What do you think is going to happen when the first time it tests that if it does it emotionally? It doesn't mean it's going to be a 100% surefire win, but I'm willing to put that trade on full size every single time. That's a beautiful trade idea setup that I love, and I don't care about being wrong because I know that the positive expectancy of that trade pays handsomely. All right, so that's it for the week. Stocks looking for continuation. The next section is overbought reversion setups. Now this one people are going to scratch their head at. I don't care. I'll explain it. It's Disney. Nice earnings gap up, pushed up. It's not so much that it's overextended. It's just this weekly chart. You get the same thing we talked about with all the ETFs and the broader market. Well, Disney's no different, right? I think that's an ugly weekly candle. I think it had a nice big move up. There's a lot of resistance up there. I'm looking for a pop into 125 to fade Disney. Again, this is a day trade. I actually would love the opportunity to start in on this thing on dips back into key levels. Maybe we get another 100 retest or whatever. But up here, I'm fading pops into 125, okay? And the last idea this week is Foot Locker. Foot Locker had a big earnings gap up, and it was weak, sold off. So what I'm looking for is one of two things. I'm looking for any kind of pop into this 130, what did I write down? Not 130. 39.50 to 39.70. Anything up in here for a fade, pretty much risking over Friday's highs. Or if we gap down, or maybe even don't gap down, but if this just rolls over and loses Friday's lows and then kind of gets a quick little sell-off, maybe, holds these pre-market lows, this 37.50 area, then I'm looking to short pops back into like 38.20 to 38.40, which was the closing price on Friday, right? So that's the idea on Foot Locker. Two different ways to play it. We'll see what we get on Monday. So that's it for the prep. Let's see if there's any questions I can kind of go over, and then we will wrap up. I know this one kind of dragged on. I apologize, guys. All right. Helvetic XR Biotech, only struggling with 0.5. Where are my profit targets? Everything else great. Clear spoken, Ricky. Thanks. All right. So for me personally, I can't tell you guys how to set your targets, but for me personally, I can tell you how I do it, right? So defined setups should have defined targets. Let's look at what would be a good one. We were talking about CRM a lot in the chat earlier. So CRM has a setup. We've talked about this a few Sunday preps ago, okay? For me, I'm always looking for one of two things. I'm either looking to join trend, and actually there's only two trades, right? There's two types of trades. There's mean reversion, meaning something got extended one way or the other, and you're looking for it to come back into the trend. So it's level of imbalance, and you're looking for it to get back into balance. That is a mean reversion setup. The only other type of trade there is joining a trend, right? So you have to answer that question first. The way I'm looking at CRM is this: we have a moving average we're extended from. We have to start with the acknowledgement, at least I do personally, the acknowledgement that things trend on the 20 SMA. So my first thing I always have to do is identify what time frame we're extended from the 20 SMA on, right? CRM has not, we're right on the weekly 20, okay? So we're not extended on the weekly 20, meaning we're not extended from it on any of the other time frames like the daily. So the next time frame up is the monthly. we are extended on the monthly, right? So in order for a stock to stop going lower, it has to do what? It has to stop making lower highs and lower lows. And once it stops doing that, once it starts to make higher lows and higher highs, that's how it can get back to that 20 SMA. So we have that, right? We have that set up on the monthly time frame here. You have your low, your push up into your weekly 20, the higher low, and then we broke those intermediate highs this month, okay? Now it's rejected and come back under. So, but the trigger is there. The trade is valid. The setup is ready to go. You're looking for an entry where you're getting good risk reward. But the target is defined. It's the 20 SMA. So if I buy CRM, Salesforce, and remember guys, they report this week too. So make sure if you have a CRM position or whatever that you know that their numbers are coming out this week. But the target, if you put a swing position long on CRM and you're wanting to see it through to the target's 225 currently, right? Now as the months go on and we don't get to the target can come down lower towards price. There's one of two ways that we get to a target. Either we attack the target or we go sideways and the target catches up. But the target is defined, okay? And so the trend that you're joining is on the weekly, because the weekly chart was in a downtrend and it's trying to end that trend. And the next level of balance it should seek is in the monthly time frame. So that's a trend join, but you're still identifying a time frame you're extended on. So in a sense, you're joining trend, but also reverting to the mean on the higher time frame. Now, mean reversion setups that we trade, at True Trader could be something like, in fact, let me open up my spreadsheet so I can just pull up a good example from recently, okay? Let me see if I can find one real fast. I don't want this to drag on too much longer, but make sure it's a mean reversion setup. Yeah, so CELH on August 10th. Let's look at this trade. I'm gonna go in here. Let's look at a 1 minute chart. So this is CELH on August 10th. If it can get me back there. All right. So selling off, right? Sell off, sell off, sell off. Why is it? Is it CELH that I have in here? Maybe it's the wrong one I have. Oh, that's a trend join. Sorry. Wrong setup. Oh, it's not. Sorry, guys. Where's the August 10th? Was August 10th even a trading day? I see the 8th and then the 11th. Why do I have it marked in my calendar as the 10th? All right, we're going to skip that one because I think I have the date marked wrong. That's really weird. I don't know how that happened. Regardless, let's just look at, see if NVAX on August 8th was a mean reversion. See, some of these are actually trend join trades, so I don't want to find one of those and then try to use it as an example for. Is that what I did on CELH? Did I use the wrong month? I'm such an idiot. I'm sorry, guys. All right, so CELH. Opening rip straight up into the psychological level, the previous day's highs, and this weekly pivot, okay? If we're ripping on a 1 minute time frame and we're pulling away from this 1 minute 20, your target should be, for me personally, for when I track my trades, I like to track using the most conservative target, right? So if something's ripping off the open, if it's going to reverse and come back down, it doesn't mean that the trend's going to end. In fact, look what happened to CELH after it gave the mean reversion. It found support, made higher low, higher high, and it was off to the races again, right? So even though we fade this move into this 100 level, it doesn't mean that it's it's going to be an all-day hold for a short and it's going back to into the 90s, right? It's a acknowledgement of an emotional move straight up that's unsustainable. So we're going to catch a reversion back to levels that make sense. So on something like this, I'd probably be taking VWAP as target and then the 1 minute 20. It didn't quite get to the 1 minute 20, which what does that tell me? It tells me that this thing has a lot of strength. Let's look at NVAX on the 8th as well and just see what that trade was. But I want to just try to illustrate to you how you should be able to have defined targets. They shouldn't be guessing games. Yeah, again, so here, sell off, sell off, sell off, right into our annual pivot down here, 57.50. And once it finds support and bounces, what's the target? The 1 minute 20. And it gets there. Okay. Now, granted, on a trade like this, you need to be acknowledging that there's the previous day's low right there. And so if it stuffs the previous day's low, I'm probably bumping my stop loss up so that I'm not going to go red on this trade. But it got through the previous day's low, and then where did it go? Went right to the 1 minute 20. What happened when it got to the 1 minute 20? It tried to hold the trend back down and failed. And so what did it do? It sought balance at the next time frame higher, which would have been the 5 minute time frame. Which, let's see if I can get back to the 8th real quick this way. Was that? Oh, it was the day they had the earnings. Yeah. So here's where we would have entered, and there's your 5 minute 20. So those are defined targets. I can't tell you how to define your own, but I can tell you what I use. Okay. And it's objective because we know that stocks trend on the 20 SMA. Now I don't care if you use an EMA, an SMA, maybe use the 21, maybe use the 19. I don't care, right? But you have to have back-tested targets, and it shouldn't be like what you're just feeling like. You know, what if you don't have a back-tested target? You know what you're going to do? You're going to be the guy that puts a trade on, and the second you're green, you're taking your profits. That's not good trading at all. All right, so let me move on to try not to spend too much time on this. DVN, Dan Kircher is saying, DVN, still an uptrend, cup and handle, looks good for an energy bounce back. I mean, it's in the right sector, right? We talked about that. Now, if I wanted to be involved in DVN, I want a retest of support, right? So 65 would be the spot for me. You got your annual pivot. It's kind of a retest of this little break here. So any kind of flush back into 65, that's where I'd be looking for DVN. But yeah, I mean, like we just said, right? It's the right sector. Okay, so if you want to be getting long on names on flushes, hopefully it's a sector that is conducive for that. Edward 28, what else do you have on your long-term portfolio? Right now, I'm mostly cash. Honestly, and I have been for quite a while. You know, I practice what I preach. So, you know, if you guys go back, you can see I tweeted out back in, I don't know, it was January or February, that we had the setup to head lower if the author wanted to do so. And when I saw that, you know, I started slowly getting out of positions. Some positions I ate losses on, right? It wasn't like I was taking profits on everything. There's some long-term swing trades I had on where they were in a loss when I took the trade off. But you know, I'm not gonna let it get worse just because I didn't want to eat a loss. So nothing really right now in the long-term portfolio. I do have one thing on, which is Stitch Fix, and it's really not even something that had much to do with the chart. Yes, it was a beaten down chart, but had a lot to do with an insider buying a shit ton, and you know, I'm kind of just coattailing the insider buy on that one. But that's not something that is here nor there. Javier, Ricky, thoughts on Roku short at 78 or 80, and Apple ugly weekly candle short 173 or 175 area. Let's see Apple first. Apple, what I do like is that it's back under this trend line. Yes, I think you can short pops back into resistance on it. I'm trying to identify where I'd like it. Let's see. All right, so what do I want to be asking myself, right? Well, here was your last high. This was the highs, right? The pullback, here was the last long trigger that failed. And where did it fail? It failed under this level right here. Yes, it retested it. No, I don't care. Yes, I want to be looking for that level to be retested again. So if that's what you were saying, was that what you were saying? 173? It is. And Javier, for anybody that doesn't know, is in True Trader, and dude is a beast with identifying these levels now, and I couldn't be prouder. This is the kind of stuff we talk about every single day in the room. So if you guys don't understand this, get into True Trader and start learning, because Javier is a really, really good example of somebody that puts in the time, puts in the work, and he's starting to identify these really cool levels that are high probability trades. So yeah, 173, and if 173 doesn't work, yes, 175. Great eye. Let's look at Roku. He was asking about Roku at what, 78, I think? Yeah, 78 or 80 was what he was asking. And remember, we had this a few preps ago. We were looking for that 88 level. So what I would look for here is, look, we had to push up the stuff, and then we had the attempt to go higher, and then this is where we broke down. So that's pretty much 80. Is that what he was asking? I think he said 80. Yeah, bingo. Good job. I'm telling you, like, these guys don't need me. And that's my goal. My whole goal is for you guys to not need me. Then I can finally stop doing Sunday preps, right? All right, moving on. Grandizer says, did I trade BBBY? Yes, but just day trading. I did not. I didn't swing any short, so I missed the big trade. Kendall, Ken in Miami, what's up, brother? Says, with SPY back at 20 on the monthly, are we in wait and see mode to see if we're going up or down at the 20 on the month? Pretty much like I said when we were talking about, like, I don't use SPY. I mean, you can. We can look at SPY. It doesn't matter. It's all the same, right? We can look at SPY. We'll just do it. All right. Again, even though we pushed through the weekly 20, it's still the first push into the weekly 20. People need to get that concept, because here's what I see happen. I see people go, oh, we broke through the 20, so now it's a long. No, not at all. Until the author of the story attempts to go lower and fails to do so, then there's nothing, right? This needs to attempt to go lower first. If it can do that, hopefully we can get that higher low on the monthly chart. And if that happens, let's get our little squiggly line out. Where is it? All right. If we can attempt to go lower and put in a higher low right here, then the break above this level, which obviously is a key level, I've already got a line drawn there. If we can get above this key level again after making a higher low, that is what should end this bear market, right? Go look at any other bear market, and you'll see, like, I have them marked, right? Look, higher low on the monthly chart. Break that, and then we're off to the races. Okay. That was the tech bubble. Here's your 08, 09 great financial crisis. Where's the higher low? Here's your low. I don't want it to be that big, but here's your higher low. Let's make this one a bit smaller. And that's why I have this line drawn here. Okay. Pushed all the way down. Now look what happened in 08, 09 when we finally reversed. It was a few months of straight up price action. And guess what? I bet everybody was FOMOing like crazy. But it wasn't until July of 09 that we finally got the higher low. So after that, then you can buy, and you have the author of the story, Price, telling you that the downtrend on the monthly time frame is ending. Okay? And look, just because you have to wait a few months and feel like you're missing everything, look at the bull market that ensued. Okay? So zoom out. Stop worrying about missing the lows, right? We're not here to catch bottoms or tops. We're here to read the trend. And right now, this could just be a lower high. We don't know. Like, that's the thing, guys. This, as much as what I just drew out, right? What you'd like to see happen if you're a bull, you'd like to see a higher low on the monthly time frame. But you know what is just as likely a possibility is this. I'm not here to pick a bottom, guys. I am here to wait for the author to tell me when it's time to go. And when he does, that's when I go back to using that cash I have on the sidelines in the long-term portfolio. Cristobal. When you sell a call and it gets to the level, example, sold to 100, my shares will be sold if not reached. My contract expires. Sell call mechanisms, how they work in favor or against the trader who sold the call. not quite sure I understand your question. I mean, so if you're the writer, if you're the guy writing the contracts, and it gets to a certain level, you can, a lot of times what you do is you go into the market and you buy that underlying, or you short that underlying so that you hedge your position, right? But because what can happen is the buyer of the option can be assigned, and you're on the hook for those. But one thing I'm always very adamant about is that I'm the wrong guy to ask about options. We have options guys in our room that are amazing. Also, I don't know if Cruz is in here today, but Cruz is a good friend of mine. He's the guy from New Age Wall Street, and he's a options gangster. Love the stuff he does with options. So I'm the wrong person to ask. I know my way around options enough to make money using them and stuff, but I don't have the expertise to be advising anybody on them. So make sure you understand that when you listen to me talk about options. KH, Roblox has been pulling back hard, and Meta, do you still think they're strong stocks worth buying for longs? Also PLTR. Well, Meta is not doing anything that makes me like it yet, right? So it's really just kind of chopping around this channel. You know what stock looked just like this really recently, and then it was Roku. Look, Roku was just chopping around and got smoked on earnings. What was the other one? There was another one. Damn it. And I was looking at the chart the other day too. I forget the other chart that I had annotated that, looked really nice, curling, and then earnings came out and got smoked. Meta is just kind of chopping around. There's nothing there for me yet. It could be eventually, but I mean, right now, nothing until over, let's see, what's the level? 183.85. Over 183.85, I'd look for higher lows and dips to hold. But right now, it's nothing. In fact, this descending weekly 20 and us pushing into it could be what we finally find resistance at and sends us tumbling lower. So, and PLTR is just a dumpster fire. There's nothing for me there at all. And in fact, if I was going to trade it, which I'm not, because it's only got a 60-cent range, it would be to the short side on pops back into resistance. Roblox. This one, here's what I don't like. So if I was going to buy Roblox, it's going to be in a pullback into 36. I don't like the way it was so mechanical on the way up. Who knows? I could be wrong. But again, I'm not looking to start swing positions on anything right now, really, at all. I'm looking for day trades. And Roblox, I trade it almost every day. Because why? Because it's got liquidity and it has range. $3 range on a $40 stock. So like flushes down to, we flushed 38. I'm a scoop. I'm going to buy that thing for a bounce. We spike into the 48.50 area. I'm definitely shorting this thing. I'm a day trader. I'm just here to make my money, guys. Thoughts on coin long. On Friday, it was down almost 10%. Was coin? I thought I had coin on my list today. Yeah, coin's on my short watch, guys. Coin, I'm looking to fade this. The only place I'd be looking to buy a flush would be like 64. So nothing there on the long side for me on coin. KH, you're always asking me about the same stocks because you're attached to them. You're emotionally attached to them. You got to get unattached. If you're still holding bags on them, it makes it really hard to get unattached, right? Because you have to stare at them every single day. What I would do if I were you is make a promise to myself that whenever I finally get myself out of the situation, that I make sure it's a hard line that I do not cross where I never ever get bagged in a stock again. And that I know people might be like, how the hell do you do that? It's as simple as what we talked about at the beginning of and this is, I guess, a good way to end this, right? It comes full circle. The questions you got to ask yourself before you put a trade on. Why should I not take this trade? Where am I wrong? And when I know where I'm wrong, how much size do I take and how much money do I risk? And how much money am I legitimately okay with losing? Because that way, when it's time to cut your loss, you cut it and you don't worry. If you thought you were okay risking, $5,000 on a trade, and then all of a sudden it goes against you and you're down $5,000, and you go, shit, I'm not okay with this. I can't eat this loss. It's too big. Well, that's how a $5,000 loss turns into a $10,000 loss. So like these questions have to be answered before you take any trade, guys. So we're gonna end it there. I hope you guys got a lot of value out of this prep. Again, share it with your friends. Get people coming in and watching it live. Also, leave comments, not just in the chat, but on the actual video, so I can get feedback. Right? Like I'd love to know what you guys like. I'd like to know what you guys don't like. Maybe I talk too much. Maybe you'd like to see these be shorter. That's fine. Let me know, guys, because we can't change anything if we don't know what you guys are thinking. Again, if you are not part of True Trader, I am telling you guys right now, ask anybody that is, you're missing out. We're teaching traders over there more than just a setup. And that is one thing that we are doing, guys. There is a system we are trading as a group. And so we're teaching you a strategy. Every single aspect of that strategy, from identifying stock selection, to what is the black and white setup, what is the criteria, how do you enter, where should you be stopping, where are your targets, like a legit system, which is not something you find in most chat rooms. Most chat rooms, and no, I am saying most, there are a few out there that teach strategies, but most chat rooms are a giant like melting pot of different traders trading different strategies, and you know, it's really, in my opinion, too much noise. So True Trader is a place where you're going to learn a strategy from start to finish and learn how to execute it. And you're also going to have, you know, access to me, and one of my biggest influences in my career is my mentor Adriano, who's over there, as well as a bunch of other really great traders. And we can, you know, help you develop any aspect of your trading that you feel like is a weakness that needs to be improved upon, whether that's reading the trend or understanding how to set stops, or what are back testable targets and how to track data, things we talk about all the time, guys. Check us out, truetrader.net. Use the coupon code, I believe, YouTube all caps, for I think 20% off, or long haul all caps for if you're going to sign up for the 1 or 2 year deal. I don't remember what it is. Or even just the freaking 5-day trial, guys, for $30. Like, come on, like, invest in yourselves, guys. I'll see you over there. If not, see you at the markets tomorrow morning. Let's all